Dheeraj Agarwal, MD Ambit Investment Manager, is with us on the show this morning. Jonathan Barrett, Chief Investment Officer, ETO Mark, is joining in. He tracks crude closely as well. We're also speaking this morning with Dr. Wail Awad, West Asia Strategist. Dr. Awad, I hope I'm saying your name correctly. Pardon me if I'm not, but I'm going to start the conversation actually with you. And your understanding of how far do you think this can go from the Iranian side? What is the end date or the possibilities of this conflict ending? Does it end eventually in a regime change in Iran?
Well, I don't think so, because what Iranians have said that to the American and to the Israelis, yes, you have started the war, but we will dictate when the war will be ending. So therefore, you can see the amount of attack and retaliatory measures they have taken against the American installation in the region and also against Israel. It gives you a clear indication that the war will take some more time, and it's a long haul. Taking in consideration also the amount of American weapon has been shifted to this part of the world. It's a very complicated situation, and may it go into a regional war.
Okay, and if that is indeed the case, Dr. Awad, then would you presume that this lasts for a month? Because these days conflicts are either very, very short-lived or then very, very protracted. Or do you believe this lasts for a better part of 2026? What's your best guess as things stand?
Neeraj, is not actually the problem here. It's not Venezuela, but the United States wanted to make sure that they wanted to destroy the ballistic missile program of Iran. They wanted to make sure now it is a regime change, because if you see from the targets they have chosen, even President Trump is saying it openly right now, despite the fact that he's saying there could be some sort of a talk if he is open for a talk with the Iranian. But I don't see this happening, because Iran is now attacking American installation in the GCC country. And just there was a meeting of the foreign minister of the GCC condemning those attacks. So therefore, the widening of the war is more likely to be seen, because Iran is not a small country as well. And Iran is already prepared for this kind of a war with the United States. And as long as it goes, Iran feel that the war is on its side. Unlikely the American, they wanted a short, swift war like the American and the Israelis, but this is not going to happen. Now with the Hezbollah in the south of Lebanon also have attacked Israel, and Israel is attacking now and asking 53 villages in south of Lebanon to be vacated. It gives you also that this war is widening, and the Iranian, where the Lebanese, now maybe Ansarullah in Yemen will step in, and Popular Front of Iraq will step in. So therefore, we are not unlikely to be seen that neither a regime change nor an end in the near future.
Okay, so stay with us, Dr. Awad. I mean, no regime change is what we're looking at as well. But let's also get in Jonathan Barrett, Chief Investment Officer at ETO Markets also. Jonathan, welcome to the show. Always a pleasure to speak to you. No, we're talking about an extension of what, around 4 weeks, 8 weeks. We don't know what the timelines could be over here in terms of the war. The key factor I want to talk to you about is with regards to Strait of Hormuz. We're talking about nearly 25% of your global shipments that come through this strait. How much of this will now be priced in terms of the crude surge, or where do you see it moving from here on?
Yeah, it's a very good question. At the end of the day, we know that 20% is shipped through Hamas. One of the key issues that I find with what could occur is the less supply forcing prices significantly higher. We had about a 10%, 15% premium. The longer the war goes on, the higher that premium will be. And I think when I look at Iran, what are some major defenses, the inflationary pressures as a result of high oil prices will have on the US. And we know the US economy is not as strong as it has been before. And I think the recent PPI and inflation numbers we've had have already told us that inflation remains a problem. And when you see a 10 to 15, 20% rise in the price of oil, that will translate to inflationary pressures. And that's something that the US, or particularly the US Fed, does not want. So if it's protracted, it's more of a concern for general investment, equities and everything. If it's shorter, then it's okay. But the way, and I agree with the doctor, this is something that's not going to go away very quickly. And if people dig their heels in this and they don't come to the table, then this goes on for some time, maybe a month, 2 months. Let's hope that's the limit of it.
It's almost sad, but I remember when we started covering the Ukraine-Russia war, and that was the hope that this is going to be over quickly. It's protracted into this long, painful situation, and then the world sort of develops a thick skin, unfortunately, and especially equity markets. Dheeraj Agarwal, I'm going to come to you on that very question. We already saw Brent cool off, and OPEC Plus saying that they will increase production has possibly helped. Having said that, do you think for equity, it is a risk-off kind of situation right now, especially for Indian equity, even though relatively we seem like a safer geography?
Yeah, but I think we will be very, very sensitive to crude prices. So Brent has certainly cooled off intraday, as you rightly mentioned today, after a 13% gap open. But remember, it's still trading 5 or 6% higher after a 3 or 4% pop on Friday. So in the last 2 days, the impact is almost 10%. And if what Dr. Awad and Mr. Barrett actually feel go right, which is that this war prolongs beyond just a week or two into months, and I'm actually likely or inclined to agree with them that it will protract. The headline war may be actually short-lived because it seems like a one-sided situation, but the simmering of the war may continue. A little bit of attack here and there, disruption of sea routes, disruption of oil supply. All of that can actually prolong into a few months. And if crude was to take up closer to 90-95, I think that's a big risk for India. So, Tamanna, you also drew parallel with the Ukraine war. So first month and a half of Ukraine war, if you recall, crude spiked almost 35%. That was February, March of 22. And Indian markets sold off about 10% during the same time period. And after that, as you rightly said, the world developed a thick skin. We also figured out how to manage the supply chains, especially energy supply. Things cooled off and life went on as usual. So Indian equity markets will be more sensitive to crude rather than the actual geopolitical developments and tension of a war. And that needs close watching.
Yeah, Dheeraj, but presuming, I mean, WTI was up some 14%, it's now up just 4%. So in some sense, crude prices have come off. Could it be that a protracted conflict, but the world developing, as we said, a thick skin around it, mean that the risk premium on the war comes off, and therefore we see a day or two of a sharp downtick, and that's about it? Could that be possible?
I mean, anything is possible at this point, Neeraj, but this area is far more sensitive to crude supplies than, let's say, Russia-Ukraine war. And remember, during Russia-Ukraine war, the Russian supplies actually continued till very recently when US actually clamped down on India buying Russian crude, whether it was through the back door or whatever the case may be. So the world crude supplies did not get impacted because India and China continued to buy Russian crude at that point of time, and the crude prices immediately cooled off. Now, this area is a lot more sensitive, both from the point of view of crude production as well as the sea passage for crude trade. So, I'm not saying crude will or can go one way up. This will be volatile. So, immediately as a response, OPEC agreed to increase the oil production last evening. That has obviously had an impact on cooling off the crude prices today. It will be volatile, but if it's a protracted war, my fear is crude can take higher or sustain at a higher level. And given the slightly fragile state of Indian economy at this point of time and corporate earnings, that will be a shock, will be difficult to absorb.
Jonathan, I'm going to come to you on what's the view from the Indian equity side, emerging markets and Indian equity especially. Because in that sense, yes, the crude hit is hard for India from that perspective, but geopolitically, we're not in the thick of things. And that is a huge relief. We have our own fundamental story going on.
Yes, I think that's like a lot of other regions as well. At the end of the day, it is all about the supply chain. OPEC can increase their supply. There's no doubt about that. The key is if the Straits of Hormuz is closed, then that becomes, yes, oil prices, we know it's coming, but is oil actually being deliverable? So back to your question, how is this look from a domestic point of view in India? I think it really is looking at the price of the inputs, because You have India, which is reliant on imports. You have China. You also have Japan. So the discussion and the strategy from the states is trying to get the states to be, and Donald Trump said it, to be the number one in the world. So this is more, in my mind, a strategic move for Trump to become and maintain number one, and also to deflect interest away from the US domestic market, where we know there are problems. So protracted supply, Straits of Hormuz closed, this will go on for some time, and as a result of that, then you'll see investments and equities start to have a concern and have a turn. Mind you, it's probably not a bad buying opportunity because we are on dizzy heights at the moment. But yeah, I think equities could come under pressure if this remains protracted.
Right, Jonathan. Dheeraj, let me come to you in terms of the action that FIs could look at as well in this kind of a scenario, because what 6,600 odd crores is what we've seen in terms of the last 1 month where FIs have pulled out. Now, with this new escalation, which is accelerating, what is that kind of trend you see when it comes to the, a capital flight for FIs? What we saw in 2025, do you think there is a repetition of something like that? Or you think this is a year where, in spite of all of these geopolitical issues, we will see India as a flight to safety?
So, FIs will react more to corporate earnings rather than events like this. And I think, as you pointed out earlier, that the world has learned to develop a slightly thick skin with respect to geopolitical situations. As I often say, even if markets are not immoral, we are certainly amoral. So we don't take a moral call or humanity call on these things. Everything which actually impacts earnings is the only variable which is relevant. This is a very different world from, let's say, 10 or 15 years ago. So if crude price sustains high, which means the fragile recovery in earnings that we are seeing in the December quarter may come back under pressure again. And if we actually drift down to single-digit earnings for FY27 as well, FIs will continue to pull out. So India, at this point of time, while macroeconomic-wise we look fundamentally very strong, we are actually missing the levers of the current global bull market. So in my career, just to put things a little bit into a protracted perspective, we have seen 3 or 4 mega bull markets. So mid-90s to 2000 was .com, IT. We had a representation in terms of software services. 2003 to 7 was commodities and infrastructure. We had representation in that asset class as well. The current bull market is all about semiconductors, AI, chips, RE, EV. We just don't have a representation in the large cap space in that segment. So, which is why India has been underperforming last 12 or 18 months. And if because of crude, our fragile earnings recovery comes under pressure again, I fear FIs may continue to pull out in 26 as well.
Yeah, the case to come in is getting weaker because of the events of the last 36 hours, I suppose. Thank you so much for speaking with us this morning, Dheeraj, Jonathan, and of course, Dr. Awad. Thank you for coming in and putting this big story into perspective from all the angles that we can think of.